Hi traders, you're welcome back to the Forex Geek channel. If you love fast-paced Forex trading, then you are in for a treat today because I'm going to be breaking down the 3 EMA 1-minute Forex scalping strategy, okay? It's a simple yet powerful technique that allows you to capitalize on quick market movements with precision. Okay, so if you have been struggling with identifying trends, filtering out false signals, or executing quick scalping trades, then this strategy will give you a structured approach to trading the 1 minute time frame efficiently. All right, so before we dive in, make sure to smash that like button, subscribe to the channel, and turn on notifications so you never miss a powerful trading strategy, okay? Also, let me know in the comments, do you prefer scalping or swing trading? Let us get into it. Now, the 3 EMA strategy is a scalping technique that relies on 3 exponential moving averages, okay, to identify short-term trends and trade opportunities. Now, EMAs are great for scalping because they react faster to price changes than simple moving averages. So we're going to be using the EMA 5, right? We're going to be using the EMA 5, which is the fast moving EMA indicating short-term price action. We're also going to be using the EMA 13. We're going to be using the EMA 13, which is the medium-term trend confirmation. And finally, we're going to be using the EMA 50. All right, we're going to be using the EMA 50. The EMA 50, which is the long-term trend filter. So these 3 EMAs help us identify trend direction, pullbacks, and entry points while filtering out market noise on the 1-minute time frame. So let's just break down exactly how to set it up and trade it. So how do you get started? Okay, how do you set up the 3 EMA strategy? First of all, to get started, you need to add these 3 EMAs to your chart. Okay, if you are using TradingView or MetaTrader, just follow the steps accordingly. Right, open your chart, select the 1-minute time frame, you add your exponential moving average indicator 3 times, then you set the first EMA to 5, you select the color for it, set the second EMA to 13 and change the color, set the third EMA to 50 and change the color. Just ensure that you use different colors for easy identification, okay? So once you have got these 3 EMAs on your chart and you are ready to use the strategy, you're not going to be talking about how to enter and exit trades based on their alignment. So for a buy setup, the 5 EMA, right, the 5 EMA must cross above the 13 EMA, right? The 5 EMA must cross above the 13 EMA. This signals short-term bullish momentum. Now, both the 5 EMA and the 13 EMA must be above the 50 EMA. This confirms the overall uptrend. All right. Then you wait for price to pull back near the 13 EMA before entering the trade. Then you set your stop loss a few pips below the recent low. Then you exit when the 5 EMA crosses back below the 13 EMA or when the price reaches a key resistance level. All right. Then for a sell setup, the 5 EMA must cross below the 13 EMA, okay? And, both the 5 and 13 EMA must be below the 50 EMA. So this confirms the overall downtrend, all right? The 5 EMA crossing below the 13 signals short-term bearish momentum, while both the 5 EMA and 13 EMA being below the 50 EMA confirms the overall trend. Then you have to wait for price to pull back near the 13 EMA, okay, before entering your trade. Then you set your stop loss some pips above the recent high, and then for your take profit, you can target support levels, right? You can target support levels. So now, scalping on the 1 minute time frame can be fast and aggressive, okay? So we need to filter out low quality setups to avoid unnecessary losses. Here are a few ways to improve accuracy. First of all, do not trade just during any session, okay? Try to trade only during high volume sessions. The London and New York sessions offer the best scalping conditions, so avoid slow markets, okay? And then use support and resistance zones, very important. If price is approaching a major level, be cautious of reversals, all right? Also, check for news events. High impact news can cause extreme volatility, so avoid trading before major economic announcements. All right, and finally, avoid over trading. Just stick to high probability setups and don't force trades when the market is choppy. All right, since scalping involves quick trades with tight stop losses, risk management is crucial. So here's how to protect your account. One, keep your risk small. All right, risk no more than 1 to 2% of your account balance in a trade. For example, if you have $100 account, you should not be risking more than $2 per trade. If you have $1,000 as your account balance, you should not be risking more than $20 per trade. If you have $10,000 as your account balance, you should not be risking more than $200 per trade. Right? If you have $100,000 per account as your account balance, you shouldn't be risking more than $2,000 per trade. So basically, that means you are not risking more than 2% of your account. If you have a small account size, I would recommend that you perhaps use a cent account so that you can have the luxury of employing proper risk management. Because let's say you have a $50 account, for example, 2% of $50 is $1. And of course, we know that the smallest lot size is 0.01, right? So if you want to enter a trade and you are constrained to risking a maximum of $1 just because you have a $50 account balance, you will notice that your trade is even going to be risky because you won't give enough room for the market to breathe, because literally you are risking only $1 and the smallest lot size is 0.01. So just 10 pips and you are out, right? So in such a scenario, I'm just going to recommend using, if you have anything less than $100 account balance, I'm going to recommend using a cent account. There are different brokers that offer cent accounts, right? You can try out a cent account so that if you fund $50, you're going to be seeing 5,000 cents, right? So in that scenario, even if you fund $10, you're going to be seeing 1,000 cents, right? $10 times 100. So you're gonna be seeing 1,000 cents. So in such scenario, you will be able to employ proper risk management because your calculations are gonna be done in cents. So if you are risking 2% of 5,000 cents, it means you're gonna be risking about 100 cents, all right? So because 2% of 5,000, right, is 100. So in that situation, you can comfortably risk your $1, which is your 100 cents, because the calculations are all done in cents. So that is just in case you do not have enough account balance, or rather enough capital, okay? Because it is very necessary for you to observe proper risk management if you want to be successful in the long run, okay? And then always employ taking partial profits, okay? Secure your gains by scaling out of trades when possible, all right? And stick to a trading plan. Set a daily stop loss limit to avoid over trading. And there you have it, the 3 EMA 1 minute Forex scalping strategy explained step by step. This method is perfect for traders who love fast trades, quick decisions, and minimal market exposure. If you found this strategy valuable, make sure to hit that like button, subscribe, and turn on notifications so you never miss future trading content. Also, drop a comment below and let me know, what is your favorite scalping strategy? Let us talk about it. Thank you for watching, and I'll see you in the next video.